This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Let's see what is going on currently on the gold market. Well, compared to the euro currency, the gold market hasn't continued move to the downside yesterday, when it was announced that the large investors who holds more than the 100,000 euros on the deposit could lose as much as 80% of their investments. This really was significant news from the Cyprus, and by this news the gold has shown some splash up on the intraday charts. But still on the daily time frame the overall situation hasn't changed much. Market still could continue move to the upside or continue move to the downside with the butterfly as usual, either upside or downside. Well, the major question here is based on whether to take long position or not, because you can see that the target of this potential move to the upside stands not too far from the current price. It's around 1625, 1630 area. Also, we do not treat this move as to the upside as the changing of the overall sentiment on the market. That is in fact just a respect of the monthly oversold, and market looks a bit heavy and oversold on the higher time frames, and that is just a retracement. That is the way how we treat this move up. So if you're bullish, you probably could try to take the position, but where you place your stop? And based on the daily time picture, it could be done probably by the placing stop below the confluence support on the intraday charts that we have discussed yesterday, and the support that currently holds the market. But in this case, the distance between your stop and the current price, I mean the risk-reward ratio, will be almost 1-to-1. So this is a bit a question with the overall bearish sentiment. That's why it's probably very difficult to speak about the taking any long position currently. If you're bearish, and you think that just market could continue to move high and will take out these highs, that is probable. Well, in this case, it's better just to wait when the market will hit the significant resistance and search the possibility for entering short in this area, or enter short against these highs with the hope that market will proceed lower with this butterfly. Okay, that has the target right at the major gold support around 1530, 1535 area. That is what we could say about gold on the longer time picture on the daily time frame. In the shorter term, on the 4-hour time frame chart, what we see? In fact, we said that this probably could become the downward move within the butterfly on the daily time frame. For that perspective, market should hold and stand below these highs. Okay, so our thought and idea about entering on the short side of the market will be reasonable only until market will stand somewhere inside of this range from that high to that low. So until this move up will be just a retracement. If we will see some strong appreciation, in this case probably will not make any sense to trying to short with this butterfly, because it could be erased by the price action. Until these highs hold, the downward tendency could be continued. And here we see what has happened yesterday. So here we discussed the potential of the butterfly pattern, but as you can see, it has shifted to the regardless triple true buy, since here was announced that about the 80% of the Cyprus deposits, and market has shown the splash up on that news, and that turns to the regardless triple true buy. And you can see that this area still holds the market confluence support and weekly pivot support 1. So that's rather significant area of support. That's also the natural support of this swing high. Well, but market has tested this area twice already. The first one, second one, now it bounced up. So either market will continue move to the upside, okay, with this bounce, because this is tested twice. So it should continue move up if it really intends to continue it. If market will fail somewhere inside of this range, then probably this will mean that this area will be broken. That's the common thought on the current situation. The shorter term perspective could let us to understand where to take position, either to the upside or to the downside, depending on your view on market. Because here we could focus on the scalp trade, and here we could deal with the tighter stops, tighter levels. So that is our working swing for the downside action. That is guardless triple 2 by initial swing, ABCD retracement, and our upward continuation. So the 100% extension of that ABCD pattern stands right here in agreement with the 768 resistance and 100% ABCD. So currently you can see that AB and CD like rather harmonic. Even 127 extension of that ABCD pattern stands in agreement with the 88 resistance. So if you are bearish, your interest is to enter short as closer to these highs as possible, because if market will challenge these highs and continue move higher, in this case the butterfly will be erased, and this will mean that probably market will proceed right to the 1625, 1630 area. That's your risk. So if you are bearish, wait when the market will hit that area or that area. You could apply the scaling, for instance, enter with a small lot here and wait. If market will proceed high, you could add more here with the placing stop above the highs on the daily time frame. If you are bullish, well, it's very difficult to advise to enter long based on the daily time frame. But for the scalp trade, you could be focused, for instance, on that triangle pattern. Since market stands now at resistance, you can see that this is the 618 resistance of that swing down. If you would like to make the scalp buy, it's thrust up not as bad as it could be, you could stick with this pennant. So if market will fail there and continue move down, in this case probably this will be downward acceleration and continuation right to the, at minimum, right to the back of the confluence support at the 4-hour time frame. But in general, the pennant is the continuation pattern, and this could lead to the upward action. So you could place stop somewhere below this pennant with the hope that market will continue move up. Well, that's a general idea what could be done on the gold market currently, because I think that's no sense to speak about the long position on the high time frames, on the daily time frame, because the situation is so that market stands somewhere between the potential target and stop loss, and that's very doubt sense that makes any reason to take long position currently. From that perspective, but for the scalp trade, dealing with this pennant is probably could be done. Why not? Well, that's my current view on the market. So that's been said. If you are bearish, wait the move either to this area or that area to take the short position against these highs and against the high on the daily time frame, with the hope that market will continue move with the butterfly. But if you are bullish, probably you have only possibility for the scalp buy, since it's not very interesting to take any long position on the higher time frames.